like that, we're off to episode 1 of the Creative Real Estate Podcast. My name is Rikki Jäck. I'm your host. Today, I wanted to take this opportunity to give you a brief introduction to the podcast, which is really just going to revolve around a little bit about what is the podcast about and its purpose, who will be the guests, and then it's going to be a little bit more about myself, who am I, my background, and finally, why I believe real estate is the best asset class to be able to create a dependable monthly cash flow. So let's get into it. In terms of the podcast itself, this is really a platform for me and those that would like to join in on the journey to be able to step up their knowledge level. So I've been in the real estate game now for the last 5 years, and I've been involved in a couple of different asset classes. But really what I'm trying to do is condense my learning curve going into the next 5 years. And I want to be able to learn from experts in their field and their specific niches, and to be able to really just harness their knowledge so that I can, God willing, be able to draw off of 20 years of experience and gather all of that in the next 5 years that I've got to be able to learn more about this business as a whole. So the kind of guests that we're going to have on the podcast is going to include foreign and local investors. You'll be able to tell from my voice, I am not a US citizen. I was actually born and raised in Cape Town, South Africa. And as a result, I've had a lot of experience with regards to dealing or with regards to helping foreign investors actually invest here in the US in direct real estate. And we'll get into a bit more about my background shortly. But essentially what I want to do is be talking to investors, because I know for a lot of us that haven't invested in real estate yet or direct real estate, it's not a common asset class to be able to invest in. Most people are used to investing in the stock market or bonds or just saving in their money market accounts in a bank. So I really want to talk to a number of investors that have invested either actively or passively in real estate transactions like these in direct real estate, hear their stories, be able to learn from them and their experiences, and also understand what was going through their mind the first time they made their investments. I know for a lot of us, it is a scary process to invest in something that we haven't invested in before, that's not considered a common investment, and that is less liquid. So I believe that is an advantage, but lots of people believe that's a disadvantage, is not having liquidity in direct real estate. So we'll touch on all these topics as we go along, but really that's the purpose of me wanting to get investors involved, is to be able to hear their story, what their experience was like. I'm sure a lot of us will be able to relate to it, and then hear why they love real estate as an asset class and why they continue to invest in real estate time and time again. So the other group of individuals that I want to be able to talk to are brokers. So brokers that are essentially selling and creating a marketplace for these properties between the buyers and sellers. I want to be able to interact with them more frequently and interview them and find out what they're looking for from buyers, what kind of difficult dilemmas or conundrums they find themselves in as brokers. A lot of the time they're trying to please both parties, so both the seller and the buyer. For a number of reasons, they want to keep us both happy, but at the end of the day, we've got different things that make us happy. So one wants to sell at the highest price and one wants to buy at the lowest price. And so their task is always tricky. And then the other thing that I want to dive into with them is understanding in the different markets that each of them serve, what's going on in that market, what have they seen, what are the changes, what's impacting and driving that market, and really just getting an understanding of what's going on in their field of expertise on the brokerage side. Then the other group of people that I'd like to really spend a bit of time with and learn from involves other syndicators and sponsors. So sponsors and syndicators essentially are the people raising equity to be able to participate in these deals, then buying the deal, managing the deal, owning and running and executing on the business plan on a day-to-day basis. These are the sponsors and syndicators, and I would love to be able to learn from them and spend more time with them and make sure that I'm learning from these guys as I myself am a sponsor and syndicator, and working with different groups in the sponsor and syndication space or partnering with them. So I want to be able to basically just learn from all of our knowledge and experience and create a collective wisdom. So that leads us to the next group of people in the industry that are extremely important in my opinion, and those are the lenders, the guys providing financing on these properties and assets. I want to understand what kind of financing is available out there for the specific niche that I focus on, which is multifamily real estate. And we'll get into that in a little bit later in the podcast. So I want to be able to talk to lenders. I want to understand what financing is available for which products. How do I know what to do when I get an asset? At the end of the day, the deal as performance revolves very strongly around the financial engineering, which comes down to what finance is available, what is the terms of those finance, what are certain things that we've got to be aware of when we're signing a term sheet, how does mezzanine finance work versus bank versus agency versus all the variety of options that are really out there, and understanding their risks and what's going on in the current market conditions for interest rates. As of today, we're at the 9th of September that I'm speaking about this, or sorry, the 11th of September. And I think it's important to note that interest rates with agency at the moment, the spreads have increased dramatically, which would change how we project our returns in future and how we underwrite deals. And there's a number of reasons for that that we could get into on a completely separate basis. But the point is, these guys are important. The underlying value of a deal is very much tied to the kind of interest rate that you can get and the financing available for that deal. And so we want to spend more time with loan originators and the actual financing houses or dust lenders themselves, interviewing them. So it's really important is third-party managers. So I want to be able to really spend time with these guys. They are the guys executing on the ground, actually doing the day-to-day management of the property. I personally am not involved on day-to-day management of a property site. I do some asset management, so looking back at what the third-party managers are doing and ensuring that they're doing a good job. But the guys that are on the ground executing, making sure that the leases are being done correctly, handled correctly, have the right addendums in place for that specific property, all of those things are really vital. What software they're using. There's a number of things that they go through. How much control do they have? What permissions do they need from the ownership? And what really makes for a good third-party manager. I just believe so strongly that it's a very important fundamental part of an investment. Everything can look good on a spreadsheet, but until the actual third-party manager or management's able to execute on the plan that you put together on a spreadsheet, everything falls away. So it'll be good to be able to just tap into some of the more experienced third-party managers, understand the way that they run their shop and how they do their deals and what they believe the best practices are for management. So that leads me to the last segment, which is really a variety. There's a number of different stakeholders that take place in the real estate space. So those would probably include people like that act as insurance agents. So you want to understand from their years of experience what to look out for on insurance's side, like what exactly is a loss run, why is a flood zone important to understand, how does that affect insurance pricing, what are some of the random things they've seen happen over the years that wasn't covered for insurance that they now recommend you get cover for. All of those aspects are really important to making sure that if something goes wrong, the property is going to be covered. Or on the other side of it, when you're underwriting, to make sure that you're expensing at the right insurance number to be able to actually cash flow on the property and to, at the end of the day, submit the right price on your bid. So that's why insurance is important. Other third-party stakeholders would involve accountants, so understanding maybe cost segregation on a property and how to depreciate it and really get tax write-offs through investing in real estate. That's one of the big reasons I really love the US market, is because you're able to depreciate assets, and it's pretty wild what you can do to be able to achieve free cash flow. So to be able to achieve free cash flow, that's really important. And then other aspects might involve software. So understanding what the different software specialists are that are out there, understanding attorneys on the legal side, what do I need to do to raise money legally? What do I need to do? What can I learn from real estate attorneys that have been in the real estate space for 10 plus years, that have seen over the last 10 years on all their transactions, they tend to have issues when clause XYZ is not in a purchase and sale agreement, for example, and how we as investors or operators or wherever you might fit in the ecosystem of real estate should be able to prepare better on a legal side when participating in a transaction. So that's really what it comes down to in terms of the guests and the people that I want to get involved with over there. So I really wholeheartedly believe that whether you're an industry veteran or someone that's new to the real estate space, there is something here for both of you to be able to learn from. And I'm just really excited to have you guys as guests and listening along. If there's any additional items of or elements of a deal or real estate transaction that you'd like me to cover, or guests that you'd like me to have on, please let me know. That's pretty much all the kinds of guests that I intend on having on. On my personal side of things, there's a number of topics I want to cover for people that are maybe more entry level to the real estate space. And that would really involve comparing properties between other asset classes. So like the stock market, cash instruments, bonds, private equity. Why do I still prefer real estate as a whole? I've got a bit of that on my website. If you'd like to go check it out, it's running in the background over here. The website is creativere.co. That stands for creativerealestate.co. That's .co, not .com. If you're listening, you can go check out a little bit more about why I love real estate in the About section, and our latest podcasts and videos will also be available on there. In terms of other topics, we'll also discuss like why I like the US real estate market the most. Part of my background, I was involved in the UK and Australia, and I was born and raised in Cape Town, South Africa. So I've been able to see investments on all those different areas, and there's a number of reasons why I like the US market specifically. We'll be covering real estate jargon and terminology, going through some of the different financial statements on a real estate transaction and really trying to understand how that all comes together and what that looks like. We'll go through some of the legal documentation like purchase and sale agreements, leases, lease structures, LOIs, how all of that comes together. We'll go through some property due diligence and analysis. I'll take you through some of the deals in retrospect that we've already done. And looking back, what was the process that we followed to get to that point? How did we make that decision? What constituted it to be a better deal than the other one that we maybe looked at and didn't bid on? So I hope to go through all of those things and just give you guys a lot more insight and try get into a bit more of the meat. There's a lot of real estate people out there and educators out there, and I just feel like they cover great content, but sometimes are missing the meat and potatoes, as they call it. And so I'd like to get into the meat and potatoes. And that's pretty much it from a personal side. If there's anything else that you'd like me to cover personally, please reach out to me and let me know. Next up, I'm going to just talk a little bit, introduce myself. So as you know, my name is Rikki Jäck. I founded and created this business called Creative Real Estate. And essentially, I've had a background in the last 5 years in the real estate space. I started out, I did a BCom, a Bachelor of Commerce in Investment Management at the University of Stellenbosch in Cape Town, South Africa, and was initially heading down the route of the stock market with the ultimate goal of becoming a portfolio manager or starting out as an equity analyst and then going towards a portfolio manager. I did my CFA level 1 and failed my level 2 exam, and the top 10th percentile for those of you that are more familiar with it. And because I was struggling at the time to find work in South Africa because of a number of interesting economic policies that were put into play, it created a situation where as a entry-level young white male, it was very difficult for me to find work as an equity analyst. And so I ended up going to a conference, a real estate conference, learned more about real estate, listened to a speaker called Dolph de Roos at the time. And the company that was paying for this whole thing was called International Property Solutions and Wealth Migrate. And as I was struggling to find work in the market at that stage, and so I offered to work for free. Eventually they decided to pay me, which I was very grateful about. And I started out doing single family homes with them. So selling single family turnkey homes to South African investors in the United States, in Atlanta, Georgia specifically, which is where I'm based when I'm not in South Africa. I'm out here in Alpharetta right now, shooting from my apartment over here. And so started out single family homes. The company then moved across into syndication, whereas before in the single family home model, we're merely acting as a brokerage as such, and then supporting the relationship between the clients and the US turnkey management group that was handling the properties. Then we moved into syndication, became a lot more operational. And with my background in investment analysis and on the accounting and financial side, I got involved in the investment committee for that. So I was doing a lot of the underwriting on the medical office buildings at the time, and working with a couple of different individuals over there was really great to be able to learn a bit more inside that space. I subsequently left that group, was on my own with a colleague that left with me at the same time for about a year. Kevin and I were working together, and then I got roped in by another group called Infinity Investments, and they at the time were focusing on multifamily development throughout the southeast. So when I joined them, they'd done some development projects, and then we came across the multifamily value add model, which is essentially what I've kind of been focusing and niching down on over the last 2 years. I like it for multiple reasons, which I'll touch on in another episode. But the multifamily value add is really the segment that I've niched down on. And I've subsequently started working with a great group as their head of acquisitions. The name of that group is called REM Capital. So REM Capital Partners, and its principals are Rod Cleef and Robert Ritson-Teller. And I've just entered into a partnership with them, and I'm heading up their acquisitions. So that's very exciting. They're looking for 150 plus unit transactions. And then myself, I've got this podcast called Creative Real Estate, and I've also got my own acquisitions firm where we're looking for smaller transaction sizes. We do and operate on our side as a sponsor and syndicator. And that is a little bit about me, my background. Next up, the third thing that I promised you I was going to touch on is why real estate. So if you are not semi-new to real estate and you're involved in the field already, I don't think I need to explain this to you. You could probably check out right now. But if you go ahead and you look on my website, for those of you that are listening, you can do this in your own time. If you go to the About page and you scroll down slightly below, you'll see that there's 3 main reasons that I love real estate as opposed to other asset classes. So the 3 main reasons really revolve around, number 1, it provides cash flow. So real estate, you buy it right, you buy the right deals, it's going to cash flow. This is specific to the US market. I want to put that out there because cash flowing real estate is not something you can take for granted. So coming from South Africa, our cap rates on properties generally take place between, I don't know, anywhere from 7.5% up to 11.5%. But our interest rate is anywhere from 10.5% right now to 11.5%. I think thereabouts. I haven't checked recently. And that's the lowest it's ever been historically. So we've got pretty high interest rates, and our cap rates are less than our interest rates, which means that we're negatively geared. Whereas in the US, we can be positively geared. And that's what I love about US real estate is it provides cash flow. As a comparison for US real estate, I think the S&P 500 is probably a good comparison. And when we look at the dividend yield on the S&P 500, I think the average sits somewhere around 2%. When I look at cash on cash yields for real estate, I would say our minimum starts around 6%. So just out the gate on cash flow, you are a good 3 times better return on your money on the real estate space from a cash flow perspective. So number 1, I love cash flow. Number 2, the reason we have cash flow is because of positive gearing. Positive gearing involves financing, and that's my point number 2, is that you are able to finance property with safe leverage, okay? What I believe to be safe leverage, assuming you're buying the right deal. Every single deal is unique, but I believe you can safely leverage property transactions because they've got predictable cash flow that comes in every month as rental income. And number 2 is you've got a physical, tangible asset which the bank sees as safe, okay? I want to reiterate that the bank and lenders see property as safe. How do I know that? Because they prepare loan up to 80% of the value on a property. I don't know any other asset class that the banks are really happy to do that about. Maybe I'm missing something. I know in businesses, they typically don't want to lend up to 80% of the business's value from a financing perspective. I know that when it comes to stocks, they don't typically want to borrow more than 50%, and even then it'll be on certain stocks. I think normally they don't borrow much more than 30%. You obviously get a lot of different instruments related or derivatives when it comes to on the stock market side where they might do that, but I'm talking about purely from a bank's perspective where they're risk averse. The bank is not going to lend you up to 80% to buy more stock, okay? Whereas on property, they will borrow you that. So I believe in that second element very strongly, which is safe leverage. And essentially what this allows me to do is it allows me to, at a 70% loan to value, I can buy a $10 million building if I only have $3 million in cash. And then I can use my tenants to pay that off. So they'll pay that off over the life of the bond. And I think that is extremely undervalued and understated and misunderstood by many investors that aren't involved in real estate because they don't see what that looks like on an exponential scale. So getting into point three really revolves around control. So foundation for wealth building for me, one of the key elements is control. Okay, if I don't have control, then there's nothing I can do to change the situation. Unfortunately, that is the nature of investing in the stock market or in bonds, is that you do not actually have control. So you can, maybe you're great at stock picking, or you've done a lot of research and due diligence and all of the publicly available information and materials that you have access to, you've drawn a conclusion, it seemed like the right conclusion, but something happened that was outside of your control because the management decided to act in a way that maybe didn't pass what was needed by the SEC, and there's some kind of regulatory problem or something goes askew, and suddenly the stock price has dropped, or something's just going wrong in management and people decided to follow strategy X, but strategy Y was the correct choice, and for whatever reason the share price drops because revenue wasn't predicted the way that it was supposed to be, and there's this whole rah. Okay, so I think you get the point, is that when it comes to the stock market, you don't have any control. When it comes to property, I have control. So I can either place new tenants in the building to increase the value. I can paint the outside. I can renovate the interiors. There's a number of different things I can do to increase the value of that property. And I really love it for that perspective, and that element is because at the end of the day, the outcome is to a large extent in my control. Sure, there's lots that can go wrong in the market, and there's lots of things that could happen in terms of population growth and job demand and all of those things in a specific area. We try and mitigate that as far as possible by doing research. But the point is that there are certain things I can do to control the outcome of that deal and that transaction and its cash flow, which I just can't do when it comes to stocks and bonds. And for that reason, I believe very strongly that real estate is the right choice. So just to summarize those three again, we've got cash flow. Cash flow is king. I'm sure you've heard the saying. We've got safe leverage, which gives you the ability to buy buildings that you otherwise could never buy with cash, okay, and benefit on the upside of those, of the whole value, not just your down payment. And then third of all is what we mentioned finally, having control of the assets. So we'll get into a bit of all of that in more detail as the podcast unfolds and as we get more into this. I hope that you found this interesting and valuable. I'm extremely grateful that you're joining me on this journey. If there's anything in addition to what I've mentioned that you'd like to learn about, please don't hesitate to reach out to me and ask about that. And yeah, I'm just excited to share this different environment with you and to be able to learn together. So that wraps up episode number 1 of the Creative Real Estate Podcast. Thank you so much for joining me, and I look forward to learning together. And just like that, ladies and gents, we've concluded another episode of the Creative Real Estate Podcast. If we brought any value to you, please go ahead and share the podcast or subscribe to all our other social platforms for additional content. From me to you, thank you for your time, and remember to stay curious and keep it creative.